Total wages in Singapore grew almost 4% last year as a strong economic recovery and tight labour market prompted many employers to raise wages. However, much of it was eroded by higher inflation. And latest data from the Manpower Ministry shows real wages growing at only 1.6%. Now, that's a touch above the 1.4% growth in 2020. That year also saw overall inflation rise to 2.3%. And with inflation forecast at up to 5.5% this year, one analyst expects that to further weaken real wages this year.
To be honest, there's very little appetite from what we see for our clients in Aeon to have a reaction to what inflation is providing. Because, like I said, the salary increases that have been given out, and they've been somewhere in the range of 4 to 5% basis our surveys, are on the back of increases that were handed out last year as a reaction to this tight labour market.
However, a silver lining with Singapore's economy expanding more than 7.5% last year. 3 in 4 employers were profitable. Some businesses were able to restore previously made wage cuts, and that saw 70% of employees getting a raise. Now, the data also shows all sectors registering a higher total wage growth compared to 2020. Key bright spots include information, communications, professional services, and retail trade. Now, they all saw hikes of over 5%. One economist says that although wage growth will remain uneven, he expects other underperforming sectors to surprise this year.
Both the airlines, the aviation industries are actually aggressively hiring, new headcounts. So wage growth in those sectors would actually rise faster. So what we have seen is that in the past, those sectors that actually has underperformed in terms of their output, in terms of their wage growth, this year, they're going to outperform.
MOM expects the tight labour market to support continued nominal wage growth in the year ahead. But it cautions that global risks remain, like the ongoing Russia-Ukraine conflict and disruption to supply chains. And these could moderate demand and keep real wages down.